US markets were shut on the back of Martin Luther Jr. Day, but futures are largely have started with a negative bias. They are in the red. Look at Dow Jones; it's down largely flat, but down 0.04%. S&P 500 is down 0.1%, and NASDAQ is down 0.2%. Largely flat, but have started the day with a negative bias. Also, the US market, if you remember, on Friday, they ended the week on a positive note, which marked the second consecutive week of positive gains. And it has started, clearly they have started on a good note for this year. We look at the European markets, though the European markets closed up higher ahead of the corporate earnings that are about to start, and the World Economic Forum that has kick-started in Davos, where all the world leaders are meeting up to discuss economic instability, inflation, the Ukraine war, and so on. So that's going to be in focus for the European markets for this week. The European markets closed up yesterday. The Pan-European Stock 600 was up 0.5%. DAX was up 0.3%. FTSE and CSE was up 0.2% in trade. So that was a roundup of US and the European markets. Harsh, how is the crude faring right now?
Well, at the moment, we're seeing crude, Ankita, largely flattish, but it has gained quite substantially from those sub-75 levels, if I can call it, where WTI was at, and very well below the sub-80 levels where Brent crude was at. But at the moment, slightly flattish or tepid is where crude is. But mind you, we've seen a good rally in crude already, and that's on the back of a couple of factors that are playing out. One is the dollar index has cooled off, and cooled off quite sharply at it. I'll request the producer to flash the dollar index in front of you for context. It's at 102 roughly at the moment. That's quite a sharp decline where the dollar index is concerned, and that will keep crude oil prices slightly elevated. The other piece, of course, is China reopening and the optimism on the back of that. We did see that the Chinese demand has actually risen by 4% year on year in the month of December. So keep your eye out on that, and as China continues to reopen and as demand expands, the supply is set to tighten a bit, and prices will tighten along with it. So at the moment, we're seeing crude roughly just below the $80 mark is where WTI is. Brent just below the $85 a barrel mark. That's where we're at the moment. But I'll take it back to Ankita on the key events to watch out for today.
Thank you, Harsh. Now, quickly, the key events that you need to watch out for today are: we have the UK jobless claims, the unemployment data that's likely to come out today. We also have the Eurozone CPI and PPI numbers, very key inflation data point that is going to come out today. Also, we have China retail sales, the industrial production, and the GDP numbers that are due for today. We also have a couple of corporate global earnings. We have Goldman Sachs, Morgan Stanley, United Airlines that are due for the earnings. And we also have earnings season going on in the Indian markets. We have ICICI Prudential, ICICI Lombard, Delta Corp, Metro Brands that will come out with their corporate earnings as of today. So these are the events that you need to watch out for in today's trading session.
Well, we will keep our eyes out on that one, Ankita, but we'll quickly move on to global stories. OECD Secretary General Matthias Cormann said China's reopening is overwhelmingly positive in the global fight to tackle surging inflation. He said that over the short term, it will come with challenges and more coronavirus cases. However, he said that over the medium term, it will help both supply chains and trade.
And China's economy is expected to have slowed sharply in the fourth quarter due to stringent COVID curbs. This dragged down the 2022 growth to one of its worst in nearly half a century. This slump also raised pressure on policymakers to unveil more stimulus this year. GDP is projected to contract 0.8% in the fourth quarter, compared with growth of 3.9% in July to September.
Well, and the International Monetary Fund said that fragmentation could cost the global economy up to 7% of GDP. The long-term cost of trade fragmentation varies from 0.2% of global output to almost 7%. This is roughly the combined annual output of Germany and Japan, mind you, part of the top 5. The IMF does not expect all countries to feel the impacts of fragmentation equally, of course.
And Bank of England Governor Andrew Bailey warned that China's sudden lifting of COVID restrictions, the fallout of the war in Ukraine, are high on list of dangers facing the UK economy and inflation outlook. Bailey also said that China's reopening will have a negative impact in the short run on the world's second largest economy. He also said that the officials at the UK Central Bank are keeping a very close watch on it.
Well, and German defense minister tendered her resignation amid scrutiny over Berlin's response to the war in Ukraine. Her step down comes as Germany mulls whether to approve an increase in military support to Ukraine in order to help Kiev's armed forces prevail against the Russian onslaught.
And the European Union's rejection of Russian energy commodities following Moscow's invasion of Ukraine won't last forever. This is the word coming in from Qatar's energy minister. Gas exports from Russian state energy giant Gazprom to Switzerland and the EU fell by 55% in 2022.
And let's move stock specific. Toyota Motors said it would produce as many as 10.6 million vehicles this year. They also warn of a downward risk to the projection from the possible impact of issues such as part supply shortages and of course COVID-19. The car giant said that it saw a downside risk of about 10% on that baseline production volume.